Since the beginning of Monday, we invested approximately $15 million. The distribution from that was over $1.5 billion. I'll tell you that the next 10 investments that were successful didn't equate to the gain on Monday. You don't have to win every deal. You just have to win enough of the good deals.
Ready to go? Avi, I am so excited for this, dude. Listen, we've been friends for many years. We get to do this in person, which is so much more special. So thank you so much for joining me.
It's lovely to be here. Thank you for having me.
Not at all. Now listen, man, I think childhood shapes a lot of who we are and how we think. And given we know each other and we've been for walks in the park and we have that relationship, I thought I'd just dive straight in. My mother's MS and actually my bulimia really shaped a lot of who I am today. When you think about maybe hardships in your childhood, what was the most prominent that shaped how you think today?
So I didn't have a extremely challenging childhood, but I was born in Israel at a tough time, and I grew up in a lower middle class family with a father who was mostly away in the military. At the age of 5.5, I was whisked away by my family, my parents, to South Africa, and pretty much dumped in a school. And left to figure out a new language, figure out new friends, things like that, and integrate into a new environment. So it caused me to become very independent at a young age, and I had to figure out what needed to get done. So I worked hard, and I tried to get results, and I think that shaped me.
So funny, one of the biggest commonalities in successful entrepreneurs is they moved in childhood because you're forced to assimilate with new people, new environments, new cultures, and you have to make it work. And very much like a business with teams, you have to adjust and develop with everyone. And so it's a really interesting kind of commonality. I think there's a question of luck versus skill in this business. I think we're often too fake humble, if I'm honest. We're like, oh, it's mostly luck. How much of your success would you give to luck versus skill, and how do you think about that?
I can't lie. I have some skill. I was a serial entrepreneur. I started a bunch of businesses, but nothing came easy. When my friends at school were surfing and going to the beach on holidays, I was working part-time jobs. I strongly believe that the harder you work, the luckier you get. I would say it's 20-30% luck.
What do you think is the luckiest moment that you've had?
Not business-wise. You're wanting a business answer. I'm not going to give you one. I'd say it's luck of having my dive master scuba diving skills, because that led me to surviving. That led me to living, because I survived the tsunami in 2004, Koh Phi Phi, where 2/3 of the island, 2,000 people died that day. And I had amazing luck to be able to save myself, save a couple of people who were drowning. And
what happened? You scuba dived away from...
No, just the fact that I had scuba diving skills because I was trapped in a hut underwater. And I managed to get out and save a couple of people in the process as well. So
I want to move to venture. One thing that struck me and always kind of came across in the references was like the speed of conviction that you have. Whether it's Ben at Designer Fund, who was like the Stripe deal, you were like, yep, done. I remember with Alex and Kazoo, you were like kind of, yep, done on a napkin. How do you think about your ability to get very convicted very fast?
I think you need to have some sort of method, and then that method becomes tried and tested. At Entrée, we have something called the 4 T's, which is technology and team multiplied by timing to the power of the team. You need those elements in place. And
what does that mean if you just unpack that? Sorry, technology and team. So that's like the core product and the team that's built it. And then the timing of which it's coming to market, multiplied by the team again? What does that mean?
No. So the formula is you take technology and TAM, put a bracket around it, to the power of the team, and you multiply that whole algorithm by timing.
Okay.
So the key thing is, one, in terms of priority, one is team, two is timing, and then technology and TAM.
Okay, super interesting. So if we just unpack those, when we think about like timing, will you take market timing risk?
Yes, we do.
You do?
Market timing risk is a function of patient capital.
And you are the most patient capital?
I think one needs to understand that you're not building for today. I think you're building for a much longer period of time.
How do you think about the ability to sustain a company through multiple droughts of financing? So I get you in terms of patient capital, in terms of waiting, but companies run out of money. And if the market doesn't come into fruition in the way that you think it will, you can't carry a company forever. Or can you?
Well, no, you certainly can't carry a company forever. But if you have conviction and you're a salesman and a company plans properly in terms of its finances, there are milestones along the way where you can take different decisions. And so you can conserve capital or you can spend capital more quickly. And I think the trick is with companies is to figure out at where those milestones are and which forks you are in the way and choosing the right fork. And then you need a fair amount of luck because there are a lot of investors out there, and it's a challenge. But you can plan on how to approach which founders, which VCs at which time, or which strategic investors at which time to get funding to hopefully succeed.
On the team side, with it being number one, I'm always interested, do you prefer insiders to a market who know it brilliantly well, or do you prefer the outsider who's got a wonderful naivety to their approach? What's worked for you, and what are some lessons for you from those two different camps?
I think I prefer folks who have an intimate knowledge of the industry that they're going to tackle. And I think they have a greater chance of succeeding. Practically, when I look at it, you take Roy Mann from Monday.com, or you take Edo from Riskified, TJ Parker, who we backed at PillPack, who as a teenager used to ride his bicycle delivering from his dad's pharmacy, drugstore, around town, or Ran Korba, who is an environmental engineer who created Breezometer, which we can talk more about it. It's a company that struggled for 6 years until it suddenly didn't struggle and eventually was a big success.
When we look at those deals, like if we say take a PillPack, and I maybe dive in too deep and you can tell me, down Tiger, you didn't have a huge amount of ownership there. Like when, I think it was Founder Collective that led the first round, and then Excel. Correct. How do you think about the importance of ownership then, given the fact that some of your biggest winners, like a PillPack maybe, you didn't have the biggest ownership?
One doesn't need a large ownership in large outcomes when you have a small fund.
How big was that fund?
That fund was an $80 million fund. Uh-huh. And I think our proceeds from the sale was $15 or $20 million gain, something like that. It was a contributor to the fund. And I think that when you look at fund portfolio construction, you build your fund not by trying to have complete home runs on every deal, but we like to call it angel and core deals, where angel deals are deals where you could have a smaller check deployed or a smaller ownership, and you have optionality to increase it with pro rata over time or to continue. But a bunch of these smaller deals generally can get you significant returns, which can bring you a 1x return on your fund. And then the big ones, they hit it out the ballpark ones, are the ones where you get the extra multiples.
I love this. So how many angel deals do you have? Like, just say, like, proportion-wise, is it like 30 angel deals and 15 core deals?
So typically in our funds, certainly the earlier funds, which were, around the $80-100 million mark, we had 10 or so angel deals and 10 or so core deals. Again, like angel deals you spend less time on, because core deals you're spending more time on, and you don't want too many deals, because our model at Entrée has been we add value. We actually work the companies.
We'll get to the value add element. Is that enough, dude? Like, I was always trained on the you need 30 at seed. Like, Avi, I am not that good a picker to do 10.
I think the largest fund, the The largest number of companies we've had in a fund, I think, is 23, 24 companies in a fund. We're different.
So you said you're just a better picker. Okay, that makes sense. Can I ask, how do you get around the element of like other VCs saying, oh, well, Avi has angel deals. Just take him for an angel deal and let me lead the round? Because that's a concern that I have.
We do angel deals where we believe that the fund leading is a good fund and can drive the business forward. It's a fund that will listen to our opinions. The business obviously has to pass muster. We kind of view angel deals as it's generally a deal we wouldn't have won. We couldn't have led.
Why don't you win deals?
You don't have to win every deal. You just have to win enough of the good deals, and you have to. And under our formula, you have to participate in enough good deals. So at times we don't win deals. We probably lose most of the deals that we want to do. I think we get our fair share. Many a time we don't have perfect conviction on a company, so we'll do an angel check, and then as we see that the company proves the data points, the questions we had, we'll be very early in trying to lead the next round or put in a safe or trying to up our ownership before the next round.
What is an example of where you had lukewarm conviction and then gained conviction seeing execution?
I think Breezometer started off as one of those where we didn't lead the pre-seed round. We bought a small check.
Small check is like $250K, if I remember.
Yeah, something like that. And then we saw a bit more conviction and we led the seed, and then we continued into the A and continued into the B, and then eventually we sold the business and we had I think we had the largest ownership in the company. We had
how much
17-18%, $250 million.
$250 million.
Yeah.
So that was an angel deal that was in the kind of core camp or graduated to the core?
Graduated to core. And,
okay, gotcha.
Yeah.
And that returns $30 million back.
So that return gave us around 30-something million back. Yeah.
Okay, got you. There's this idea that you're not able to concentrate capital into your winners. It's like, I often hear it, which is like, well, that model doesn't work because if it's really working, Sequoia or Andreessen or whoever will just come in and just take the A and you won't see any of it. Is that incorrect, do you think?
I don't think it's entirely incorrect. I think today you want to generally get the next round done by a fund that can do the round after that. So if you get a fund in to do the A, you want to know as a founder that the fund that's doing your A can do your B, can lead your B. Because you don't know where the world will be in 2-3 years later, and you want your investors to be able to continue, and also continue when the chips are down, when things aren't great. And what we've found is that many times we've led the seed and led the A in companies that weren't executing at the best time. But naturally, what happens is that if you are doing extremely well, then inherently you'll gravitate to tier one funds who want to lead and who'll write a bigger check and will carry on. And we kind of feel that playing together is better in the long term in the long term interests of the business.
Avi, is signaling risk real? Tier one fund does the seed and then doesn't do the A. Is the startup dead or challenged? Or
I think the startup is challenged, of course. And that's part of the challenge with what's happened today within what I call the institutionalization of VC, where Andreessen and Sequoia have become such big funds. They investment managers. The multiple targets are different. The IRR targets have changed. It's almost like a BlackRock for startups. And so it's very easy for them to write that very early check because it's such a small fraction of their fund. And
that large check, that 5 on 25, is actually whatever.
More like 20 on 40 or things like, like big checks, that's what's happening. And for them to write a $20 million check is like for you or I to write a $250,000 check. You have to look at it in that context. So I think it doesn't matter to them. Maybe reputationally it matters to them, but I think that for when a startup starts, it needs to think about these things.
I think people have short memories, actually. And, Flow was $300 million check from Andreessen, and I think people kind of forget pretty quickly these days. So I don't think even reputationally it's that challenging unless it's really, really freaking bad. And even then it's kind of forgotten. A question that I have on the back of that is 5 on 25. I think price matters. I'm old school, Avi, despite my youth. And, Peter Fenton said before on the show that price is a mental trap, or valuation is a mental trap. Saul, who's on your team, said to me that price and valuation is something that you have spent a lot of time kind of disciplining him on and talking about. How do you think about price sensitivity today and valuation?
I don't like expensive deals. What can you do? High price deals with a large amount of capital early in a startup's life closes opportunities for it. I think it creates a situation where you're not really running the business as lean as you could be. You're not making the decisions that you should be doing at the earlier stages. I think it leads to bad decision, and I think it narrows the permutations of future fundraisings down the line. Having said that, in Israel, there's a big challenge where the top deals are typically $6 to $12 million on anything from 15 to 30 or 40 pre's, and I suppose that Entrée has done at the bottom end of it. I mean, we've written some checks at 6 on 12, 6 on 15, things like that. But we generally don't write the bigger checks. We definitely don't.
Why do Israeli companies dilute so much so soon? It is astonishing.
So I'm not sure that they're diluting so much.
Well, 6 on 12
because it's 6 on 12 is.
I mean, do you want my wife and child
is
too?
4 on 8 the
yeah,
question
but I don't
is.
ever see 4 on 8, Avi.
But it's the amount of capital. And I don't like that dilution. I don't like that valuation. I think that you can do more with less. Yeah. And I think it sets the business from the start on the wrong path. Now, bear in mind, if I'm building the next GPU, my seed round has to be $15 million, a different type of business. But for asset-light businesses, for businesses that today you can get MVPs out the door in 3 months, where 3 or 4 chaps can sit in a garage or a basement and can write some code and get some POCs with initial clients at very little real cost to themselves. I think that $6-8 million rounds is just unnecessary. It's unnecessary risk to take, unnecessary dilution to take. I think you can do a heck of a lot more with less.
Listen, I totally agree with you in that respect. So how do you determine when to pay up versus when not to? And does that mean that you don't do US deals as much anymore?
We go through phases. We do deals that we like to do. And I think we concentrate in different places at different times. So from our perspective, we like to do the deals that we like. We don't feel that we burdened by doing 15 deals or 20 deals in 2 years and then raising another fund.
You don't feel you have to play the game on the field?
No. Our view is we are one of our own largest LPs. Our personal money is probably first, second, or third in size in our various funds, and so it's our money, and we want to make sure that we invest it correctly. In cricket terms, it's not a one-day game.
How you invest when most of it's your money?
Responsibility, shared risk, shared alignment with our LPs. We pay management fees. So we're pretty aligned with our LPs.
Do you think you go slower because of it?
I think we go at our own pace, which sometimes it's slower, sometimes it's quicker. It's just our own pace. we don't need to build AUM. We don't need to build management fees. So, from our perspective as a fund, we focused on the businesses, and we don't want to do too many companies at the same time, because we find that the more we involved with our core companies, the luckier those companies get.
We're going to get to value add. It's like the post-investment. The other one, though, was TAM. I find TAM a wonderfully misleading topic, because the greatest markets often start off as toys, or the greatest products start as toys. The greatest markets don't exist. How do you think about TAM? What have been some of your biggest lessons in how to analyze markets when entering a business?
Massive markets are great, but not every market is massive. You find great founders, and those great founders are not necessarily running after massive markets. But if that founder and the business opportunity they have can be number one or number two in a smaller market, then, and when I say number one or two, I mean it in terms of revenue, profit, then people will want it, and there'll always be an exit path for it. As I said before, more capital reduces the options. So in massive markets, you have to deploy generally bigger capital, larger amounts of capital to fund, because there are more competitors, and there's, and other things are happening. But we don't shy away from smaller markets. We want to make sure that you can absolutely be number one or number two in that market, and then you'll get a reasonable return, and 3 reasonable returns make a fund.
Do you like competitive markets? When people argue with me on the show about this, I hate competitive markets. You don't have pricing power, your CACs are high, your retention's lower, product marketing's harder. But then people say, well, any worthy market's competitive, Harry. So, nice thinking, which I think is bullshit. How do you think about competition in markets?
Competition is great when you're on top, right? But I suppose competitive markets, people invest in those markets many times. More vanity than sanity is kind of ruling the investment. Nothing wrong with competitive markets as long as you can have a good handle on your costs and you can win. I mean, if you take a company of ours, SeatGeek, as an example, highly competitive market, difficult margins, and yet they've managed to carve out a vertical offering within that market where they've gone deeper into the ticketing systems of the clubs and of the event spaces, and so they make money on, like StubHub on selling tickets, but they do so much better because they're starting to control the ticket generation, the price optimization, all kinds of things like that. So I'm not afraid of big markets, but I'm wary of big markets which are competitive.
I totally agree and get you there. Would you ever back a founder where you think the founder's great, but the market's horrible?
I would try get that founder to understand why I don't like the market. And if I can, and that founder chooses a different market, then I'll try back them. In some cases, like in SeatGeek, they started selling tickets, and then they found a wedge of getting in. They bought a company out of Israel called TopTix, which provided software for event spaces and clubs to manage their ticketing. And that wedge got built into a big business. Here again, Monday.com is another one where they went after a kind of a general market, right? But they figured out a wedge. That was a wedge, and now their big businesses in that is Monday Dev, which competes with Jira and things like that, and Monday CRM, which competes with Salesforce and Pipedrive and things like that. And they've built big markets.
So the reason I asked that question was because I just backed a founder in the CRM market. And I freaking hate the CRM market. It's just like, when you did Monday, different market, different competitive landscape. But now, it's just such a crowded competitive market. But the founder's incredible, and it was a pre-seed. And so it's like, write the check if the founder's amazing. And so I did. But I do want to talk about Monday because I spoke to Eran before the show.
Wonderful
Fascinating
guy.
chat. Yeah. And I'd love to just start with that. How did you build conviction in Monday when, respectfully, SMBs was like, no, that's not a good market. CRM was like, no, that's not a good market. How did you see goodness when everyone else saw unattractive market?
starting off with Monday, the last business that I built myself was a SaaS product for the GRC market, governance compliance market, and I wanted to build it very open. But then we were using Microsoft SQL Server. It was the early 2000s. AWS wasn't around. There were so many limitations, and we built a successful business which we sold. But my vision was to build it in such a way that it wasn't vertical. It would start vertical in GRC but move horizontal to other areas. And then Monday came along, and I saw Monday, and in that I saw everything that I wanted to build, but fleshed out so much better, and no limitations because of AWS and things like that. And other VCs, other people saw Yammer or Slack or something like that. And so we were in the first round of Monday, and
how big was that round?
$1.5 million.
Okay,
like the old good days. And where others around the table didn't see it, I slammed my hand on the table and I said, "There's no way. I'm putting in a safe. I'll fund you. Let's carry on. We're going to build a great business." And I was very involved in kind of the day-to-day almost of the business at some point there. And then, if memory serves right, we put another safe in, and then we led the A. Every time, no tier 1 or tier 2 VC wanted to back it. They just didn't see it. There was always the argument of, but you don't have enough enterprise clients, but this is Yammer, or this is Slack, or this is this, or
Did someone not show up to lead the A and then fell away, and you had to step in?
So there was a potential of Sequoia in Israel doing the A, but no, I don't want to say what the reasons were. It ended up that we had to step up and make it happen.
And so you step up and make that happen, and you wrote a what check in that place? Like a $6 million check?
No, it was the round was $6 million. I think we wrote 1.5 or 2 million of it. But it was a real, you had to dig around and get a bit of checks from everyone else to make it happen.
Was there ever a time when Monday didn't look good? Was it just a rocket ship from day one?
No, the first 8-9 months of Monday, we didn't have product market fit. I remember we had 6 customers, and we had 6 months of cash left, and then there was the breakthrough of hitting product market fit. But then again, everyone shied away because of the market segment. They weren't going after enterprise first. And in retrospect, we should have gone after the enterprise maybe a year earlier than we did. But once we started the initial touch points of doing enterprise, then we did the B, which Jeff at Insight had the foresight to lead, and it was a runaway success from there. But even going to the C, the D, the E, the big funds, the tier 1, so to speak, were always elusive. There was always a question, and I think that's how we ended up being such large shareholders of Monday, and fortunate enough to be with the business along the way. Initially spending a lot of time with the business, but as it grew, spending less, but being around the table. And I'm extremely fortunate to be a board member of Monday as a public company today.
How much was your position in Monday?
We had invested over the period, since the beginning of Monday, we invested approximately $15 million.
And that position is?
The distribution from that was over $1.5 billion.
Fuck. Wow, dude, that's real money.
Yeah,
that is impressive.
Yeah.
Okay, so I'm just fascinated that when you think about that, and I mean this in total respect to TJ and PillPack, but and then the $15 million that you get from a PillPack style, does that not just prove the complete outlier nature of venture? And does it not just prove the only thing that matters is being in your next Mondays?
We're extremely fortunate and lucky to make $2 million on a deal or $1.5 billion on a deal. It's the point is, for us, it's a passion, and for us, it's the ability to work hard. And sometimes I'll get a bad rep because sometimes I can be a bit harsh with with my founders and things like that. But we live it, we breathe it, we love it, we have passion for it, and we do it out of love. And we think that playing that game with that kind of passion is something that maybe sets us apart from some of the other players. It doesn't make us a pure financial player. We're looking for the business to succeed. We're looking for the business to do well ahead of the financial return we get. We kind of think that if the business succeeds, we'll be okay. And a very different approach.
You mentioned that distribution. I think I said this to the Forbes journalist, but I remember saying to him, like, Avi is just a fucking master at making money. No, really. Like, yeah, and it's a hard thing in venture. Again, we've trained a generation that's all about getting in, and it's not. It's about getting out as well. And that is a very hard thing that I fucked up on in the last vintage, admittedly with a very small fund, so at least my learnings are contained. What are your biggest lessons on when to start selling down and how to sell down?
So lessons learned. When we started Entrée, we put down 7 or 8 principles. And one of the principles that we put down was how do we not fall in love with the value we see on paper? And so we decided that the minute that the price per share of a current round is, I won't tell you exactly, but 6 or 8 times your price that you came into the round, try sell a third. And when you get to the pre-IPO round or in the IPO, across that kind of time frame, try sell a third. And when the lockup expires after an IPO, sell everything or distribute the stock. The idea behind it is that in the context of VC, we're private investors, we're not public investors. We're not Goldman Sachs or BlackRock or State Street or etc. Our competence is getting the business to a place where there's liquidity and it's successful. From that point on, it's someone else's opportunity. We've kept to that, and that's managed to save us, both in the case of Kazoo, where the valuation got to £2.5 billion. I think it was pounds, 2 rounds, the round before the pre-IPO, and we sold a bunch. And
at then 2.5 billion.
Yeah. And when the company went public, we sold a bit. And when were
you able to sell?
Yeah, there were challenges because how much you could sell. But so we didn't sell a third at the IPO. We sold, I think it was 10% at the IPO. But and then when the lockup expired, it was distribute. It wasn't, the price is at $5 now, $4.50 or $5. It's not at $10, but at $4.50, $5, it was still, $2.5 billion business. And so, and so that's what informed.
How much did Kazoo return for you?
We did well.
You can't blame me for pushing. You did. That's a fascinating one. What's the take on Stripe? Ben told me to ask about this, like getting in and getting out.
Ben's the closest to the scene. But the one thing that I've discussed with Ben and that we've worked on together is the same principle. And luckily for me, we're investors in Ben's fund as well, Designer Fund, which is a great fund. Pitch for Designer Fund. If you're a designer, go see Ben. I think he took our advice well, in the process, and I think we've both exited close to 50% or just on 50% of our holdings in Stripe to date.
You mentioned when it lockup expires, you sell everything. Quite a lot of investors have the idea that they have asymmetric information. They've known the founder for a long time, they've known the company for a long time, and actually they're best positioned to know what to do with that public stock. Why is that not the right case?
Bullshit. It's a public stock. So you have insider information, then you run a risk. The fact that you've known how the company operates in the private sector does not mean that you know how the company trades in a public market, where it's at the whims of trading machines, of hedge funds, of other people that can manipulate the stock price and can move the stock price very easily. When you're a private company and you miss your quarter, it's fine. But when you're a public company and you miss even by 1 or 2%, you've seen situations where share prices can go down 25%, right?
We saw Salesforce have a $40 million revenue miss and it dropped 20%. I know it was not that. People really fucked up on the analysis of that one, though. I listened to...
But you can't control that, right?
You can't control it.
And you're in the public market, and you can't tell Capital One or any other fund, public fund, or others, what to do with their stock. So it's not your opportunity. The point of VC is to get companies to an exit or to get public. The point of a VC is not to, it's venture capital, it's not private equity, it's not long-only funds, it's not hedge funds, it's not public asset manager. That's called VC for a reason.
Doug Leone said on the show, and to me, that the venture business has transitioned from a boutique kind of cottage industry to an institutionalized, commoditized asset class. Do you agree with that?
As I said earlier, I think that the Andreessens and the Sequoias of this world have become more institutionalized because of the large size of assets they manage. And when you're managing tens of billions or hundreds of billions, it's hard to manage single-digit millions or 10 or 20 million with the same attention and the same oversight that you have on managing a 500 million or $1 billion position. And I think that therein is the opportunity for artisanal or boutique or smaller VCs, where it does matter to them, and a partner can bring the required attention for the required period of time to help you build your business.
Do you think founders want your help? I remember Jason Lemkin said on the show, no, founders just want you to give them money and sod off.
It's great to have founders who don't need you. In other words, they come to you for advice every now and again. It's great because, from the perspective, if they know what they're doing and they're building a great business and it's going great. So, case in point, when you look at Monday at the beginning, we were very, very involved. And if you look at Monday, once it got to the C or D or E, it was a meeting every month or every, something like that. It just changes. And then they just need course correction sometimes, or a bit of mentorship, or a bit of alternative advice. But I think by and large, when you start a business, you can use help. I was a first-time founder as well, and I made many mistakes. And the one thing that made me make many mistakes and yet still succeed was that I had someone with more experience who was a mentor and could help. So I wouldn't be so bold as to say that everyone needs us, but it's good to have a partner along the way.
One thing I do think that people disagree with me on is I think actually VCs can be helpful pre-product market fit. I think this is something we drastically underestimate, which is I think a lot of founders don't have a tight enough ICP, the product marketing isn't quite right, they're too diversified on channel acquisition, and actually you can actually say, hey, we need to be tighter, we need to be more focused, and you can really direct the kind of acquisition of product market fit by having those lessons.
I tend to agree with you. I think there are founders, you can't always have everything complete. Everyone's got challenges, everyone's got weaknesses. You, me, everyone. And so, some founders have a challenge in understanding how to raise money. We've got we've got a founder, and he's an ex-Google fellow. He's got 40 patents to his name. He's just the most unbelievable guy in terms of the technology side of the business. And what we've done is we've helped him, and he couldn't hire for shit. And what we've done is we've got an organizational development specialist on our team, and she's helped him recruit unbelievable sales channel, around him. And we've got another person on our team who's been very involved in helping him understand how to raise his Series A, which he did successfully, but on the basis that we kind of gave him a path, and we showed him how to pick which VCs to go to, when to go to them, how to go to them, and he did the work. But there was just that element that added that necessary gap that he didn't have.
Do you think the best CEOs are the best fundraisers?
No, I think it's a great advantage to have as a CEO, but I don't think it's the I don't think that if you can't raise, you're not a good CEO. I think there are, depending on the business, again, there are businesses where, the primary day-to-day job is not raising money. The primary day-to-day job is building a product and closing customers. And raising money is a necessary evil that needs to happen every couple of years. So I don't think that.
I agree. I also think people often come, if you think about it, you sell to three people: your customers, your team, and investors. I think people are like, yes, they are, because you need to be able to sell to those three. But selling to customers and team is very different to selling to investors. Often it takes a different investor language, mindset, knowing what we compared to the other two. And so you can be great at those two, but not that. Yeah. My mistake in the past cycle has been not selling when I probably could have done. So when that's my biggest mistake, what's your biggest investing mistake?
Well, my biggest loss as an investment was very early on, where we invested in a Boston-based company called Harvest Automation, and a bunch of really clever guys out of iRobot.
How much did you put in?
Over the period of time, we put about $4.5 million in. And we lost the money.
All of it?
All of it, to the cent. And as an engineer, because I'm an electronic engineer by profession, not profession, but by study. But as an engineer, I fell in love completely with the product and what they were building and robotics. And this was in 2010, 2011. But I didn't have a clue about ag tech. And so I didn't understand that these robots, they're going to run around. Understood they're running around the field and they're moving pots and things and etc. And I thought, wow, we can do this, And there was, we had like lidars on these things, and and lidars were like, at that time, I think it was the most expensive piece of the robot. I think it was like $12,000 for a lidar. Today a lidar can set you back $150 kind of thing. And kind of. I fell in love with the product and with the engineering, and I completely was green and didn't understand that the founders weren't suited for this, and the market wasn't suited for this, and so you learn your lessons as you go along.
When you don't believe in a founder anymore, do you tell them?
I've had on occasion the situation where I've had to have a heart-to-heart with a founder.
What's the benefits of telling them is the question that I ask myself, because it's like, it's just going to hit that. They're not going to say, oh, you're right, I'll stop, I'll give all the money back to all the investors.
No, I think it allows you to reset your relationship with the founder and reset their expectations from you as a founder and as a person who's either on their board or person involved in their business. And I think it's important, because I think it's important to explain and put your position forward, hear them out, and I'm sure that in many times they have their rationale, but it kind of allows you to then be honest with them and move on from that. They don't have to carry it, you don't have to carry it. It's much easier for everyone, just being honest.
Monday, $1.5 billion. What was your second best returner?
hundreds of millions, so much less. I'll tell you that the next 10 investments that were successful didn't equate to the gain on Monday. Outliers.
It is an unbelievably strange business, huh?
It is, but...
I always say to my mother, can you imagine a chef when 99 of the meals that they cook suck and people hate them? They leave the restaurant, but one is the best in the world for that, and then they are the best chef in the world.
I think a good restaurant is you have a few outstanding meals that happen on a night, and the bulk of the other meals are good, and that's like a good restaurant. And hopefully only one or two people leave the restaurant.
Do you have many zeros?
Do you have many zeros? So this is it's kind of interesting because one of the fund of funds looked at our portfolio a couple of years ago, and they said to us that they couldn't get us, and their rationale was that when they put us on their chart of evaluating, they said your returns are top 5th percentile VC returns, but your losses are private equity losses. And they try to argue to us that we actually don't take enough risk.
Yeah.
Our losses at maturity, in other words, when I tell you we've got 3 funds that are over 10 years old, or 2 are 12 years old now, 13 years old, and one is about 10 years old. And at that stage, you've pretty much the loss rate has matured, and the loss rate has been around 15%. One is 12%, the other is 15%.
Do you think you take enough risk?
I hope so. Clearly, I'm told not enough, but it's kind of in a public company. They're right at the bottom of the quarterly. They're right there that past performance is no indicator of future returns. So it's easy to sit here and talk about the last 12 years, but it keeps me up at night. What's going to happen with the businesses now over the next 10 years? Because we have tens of businesses that are pre-seed, seed, and A, and they have to get somewhere, right? They have to mature, and they have to grow, and they have to succeed. You're only as good as your last deal, or you're only as good as your next exit, right?
What's the DPI on your best performing fund?
38x.
38x.
Yeah. But
how big was that fund?
But the other 2 funds, a small fund is $45 million fund, but the other 2 funds, which are $80 million funds, the DPI is around 5-6x.
Pretty good.
It's
it's one thing that frustrates me though, which is like there's a generation, and I sound so freaking old. Bill Gurley calls me boomer, which coming from Bill, but I hate the way that so many like younger investors I don't know if it's like going to be a 20x fund, but we'll definitely be an 8 to 10x fund.
I don't look at that.
Yeah,
I kind of look at how many X's is the fund after year 8 or year 10. Before then, it just doesn't count. Sourcing,
selecting, servicing, 3 core tenets of venture. Yeah. How do you think about what you're best at and what you're worst at?
Our sourcing could be much better. I think we're very good at servicing our companies.
Where are you weak as an investor today? Or where would you like to be better?
In everything. I want to be better in everything. For better or worse, one of my characteristics is that I always think that I'm not good enough. And I always have to improve.
Where does that come from?
I think it comes from my childhood. I think it comes from, having very strict parents, having expectations, by your parents.
Did your parents tell you they were proud of you?
Not enough.
Did how your parents parent you impact how you parent your children?
I try to take the good and avoid the bad. I hope that one day my kids will come back to me when they're much older and say that we did a good job.
I heard a brilliant one the other day, which is like success as a parent is when your adult children choose to spend time with you. Like they actively want to hang out with you.
That's true.
And another brilliant one is when you have well-behaved grandchildren.
I think as your kids get a bit older, I've got twins who are now 20 years old and one who's 15. And I think that as they get older, they come to you for wisdom. And I think maybe, I'm sure other parents are guilty of this, as I am guilty of this, is that unfortunately it takes us time to learn that they're coming to us for wisdom, and many times we inadvertently take it as an opportunity to control. So many times the advice we give them or the things we tell them is more about us trying to still control them or have some level of control over them, versus trusting them that we've instilled the right values in them, and hopefully giving some of our wisdom that we've learned over the years.
When we think about misses, I do think misses also shape mindsets. What's a big miss that you have, and how did that shape your mindset?
So I'll tell you, a lot of the misses that I've had, misses are good to have. Misses are things that, it helps shape you, it helps you learn, and it helps you, and you can't win everything, right? But misses that you learn from, I'll give you two examples. There's one example where at Lemonade, they had done the A, and I remember I was driving home and I was speaking to the founder of Lemonade, and we didn't do the A. And I said to him, well, can I give you a safe? Because we want to be involved with you. We want to be in the business. And he said, yeah, let's meet and talk about it, and I'm open to it. And I said, all right, fine. I'm leaving. I'm going overseas. I'm back in a week. We'll set it up. We'll do it. And in the rush of things, I forgot. Never invested. So, learned a lesson from that. Funny enough, it's the same.
Was that at the A?
Just after the A. I don't know that he would have taken it and this and that and etc. But, my mistake.
So what did you learn as a result? Like, if you're in that, you cancel the trip and you do the deal, you write the safe when you're on the plane. Is there anything you would do differently?
No, I think be more determined, be more action orientated, where you have an opening, put in your diary, don't leave it for I'll remember. It's like you have to I kind of tell a lot of founders that there's 3 W's, who, what, and when. That everything they do has to be who, what, and when. So when you start a business and when you're running after your client or trying to get a customer or trying to develop a feature or everything else, it's very simple. Who's going to do it? What are they going to do, and by when are they going to do it? And if you instill that kind of principle through your managers, and they do that to their employees, then the culture that you develop in a business is that much stronger.
I love that. Okay, so that's one. You said there were 2?
The second one was literally a repeat of the first one. And then there hasn't been a third one.
That fucking memory. I should give you a memory game. That's like, I love that. Well, yeah, that's a pain in the ass. You know what I do? I send emails to myself with like subject lines. Send safe to Lemonade. Is there anything that you know now that you wish you'd known when you started Entrée? Final one, and then we'll do a quick fire.
The experience is something that you should go through. Do I wish that I had acted differently at different points along the way? I suppose so. I suppose we all make mistakes. It's not about making the mistake. It's kind of learning from it and dealing with it. And sometimes you have to learn how to deal with things differently. So I think it's life lessons. But would I have it any other way? I suppose I'm at peace with what we've done and what we've built.
But you decided to be more public in terms of fighting for Israel's right to protect itself and against global anti-Semitism. I spoke to Sean Maguire actually about this, and he said how amazing you've been and how you built your friendship kind of on the back of this in many respects. Why did you decide to be so actively public when it is easier, bluntly, to shy away and keep your views private?
Sean's a wonderful guy. I wouldn't say that I'm very public. I work more behind the scenes. So there's 2 questions here. The first is the new government that came into power in Israel in 2022 and the events that led to the October 7th Hamas attack on Israel and Hezbollah in the north, which are still in play today. I find that Israel civil society is broken today.
Why is it broken?
So contributions by one segment versus the expectations of another are misaligned in Israel, segments of the population. And as a nation, and as being a Jew, I feel we held to, I'd like to think we held to a higher standard. And I find that our nation, that as regards our nation, Israel, our ego, our self-interest, coupled with things like corruption, are affecting our daily lives, and have been for over a decade. And it's gotten to the situation where government services like education and things like that are breaking down, and that in turn is breaking down our social fabric. And there's enough blame to go around. The biggest consequence of all of this is October 7th. And I really fear that very little has been learned from the 7th of October and the events leading to 7th of October. We've reached a critical juncture as a society and as a nation, and things need to change. We need to change to empathy, to tolerance, to self-awareness, and a restoration of our collective morality.
It is okay for me to ask. Like, the tide seemed to turn against Israel, where it's like incredible empathy and sadness for the terrible attacks, to a belief that actually the response is not aligned.
So we need a new generation of leaders.
Is that how Israelis feel?
I hope they feel that way. I think a fair amount do. But we need a new generation of leaders. Israel, it's a young country. If you look at the bell shape of Israel versus other countries, given the high birth rate in Israel, it's a young country. And so there are probably about 2.5 million people. Just over a quarter of the population is under the age of, is kind of between the ages of 18 and 30. In other words, voters. And they're the future. And they can create a new bloc, and most of the 120 members of parliament, members of the Knesset in Israel, should go home. And like I told you, the comment about the kids and wisdom, I think that the older folks like me and others in Israel can provide wisdom and can provide management skill and things like that. But I think the decisions are for the youngsters in Israel to make. It's always been a nation that's driven by the young folks with great vision and great ideals, historically, like the kibbutz movement and kind of the early 60s and things like that. And we need to go back to that. And I think there's a big block of youngsters that can go out and vote. And all this leads to, and that's the first part. The second part is the issue of anti-Semitism. No one around the world likes when a minority group raises its head too much. Minorities are great when they are a minority, right? And we see that.
Do you think we've always had this undercurrent of anti-Semitism? You see it in the US collegiate system.
Yeah.
And I look at that and I'm like, I don't think a lot of these students were always anti-Semitic. It's just that, sorry, it sounds awful, but the topic du jour, like climate change riots are in Oxford Street and we hate fast fashion, and people just join.
I think anti-Semitism has always been there, since literally the birth of Judaism over 3,000 years ago. The oldest religion in the world, the oldest living nation, which can trace its roots 3,000 years or more. Jews were hated for being Jews. They were hated for being segregated. They were hated for being different. In the Middle Ages, Europeans didn't want Jews to. Europeans didn't like to handle money because they thought it was dirty, and so they made the Jews deal with it. And then 100, 200 years later, they say Jews finance the world and are the root of all evil. Now what's become is that you hate, not you, the folks hate Jews for having a country as small as it is. I mean, it's 1/10 the size of the United Kingdom. All right, out of 6-7 billion people around the world, there are maybe 16 million Jews. There are fewer Jews today in the world than there were at the beginning of the Second World War. All right, at the start of the Holocaust. But Zionism, which is self-determination, that's all it is just simply a step too far. And so the anti-Semitism today is about Israel, is about Jews having a country, Jews having self-determination. There's Rabbi Sachs, Lord Rabbi Sachs, who was one of probably the greatest philosophers of the 21st century, said that in history, hatred starts with the Jews, but never ends with the Jews. All right? And so Western society needs to get a wake-up call. Israel and anti-Semitism are, we the canary in the coal mine. We the front line.
I remember the Niemoller quote,
starts,
and then it kind of ends with, and then they came for me.
Yes, and so it starts there, but never ends there. And and you've got to take a stand. You've got to.
So final one then. What actually happens from here? Do you not just breed a generation of Palestinians that continue to hate Israel and Jews?
There has to be a change. Israel has to have fixed borders, because set and fixed borders enables you to operate legitimately as a nation state, right? And I think that the Palestinians need real leadership, and I think the world needs to stop using the Palestinians as a scapegoat. And I think that everyone has to be a bit mature and come to agreements, whatever they are, that will promote peace. I'm a patriot. I believe in my country. I'm a Zionist, and I have to take a stand. And if I don't, who will? And in humanity's progress is us leaving for the next generation the world which is slightly better than the world we found. And so, that's what we want to do, and that's why I help, and others like me help folks and help the evacuees, the hostages, the soldiers' families, the building resilience, trying to protect our country better, and helping the army if it needs help. We got to get to the next step, and this, and that's why I say to you, anti-Semitism, the first part of the answer I gave you about Israel's society and the future that we want for our children. You take these three circles and you put them. There's an overlap in the middle somewhere, and we need to find that. And you need real leadership, and you need real on both sides. You need real leadership. And you need real vision. And it's not clear to me today, sitting here, what it is. I wish I knew.
Wide-ranging discussion.
Monday
distributions to the future of humanity and progress. I do want to do a quick fire there, Avi. So I say a short statement, you give me your immediate thoughts. Does that sound okay?
Sure, let's do it.
So what have you changed your mind on most in the last 12 months?
That the world has become a far more dangerous place.
What's the biggest misconception of the Israeli startup ecosystem?
That it's done for, that it won't bounce back.
Michael Eisenberg said on the show the other day, it's already bounced back. Cash is already flowing in faster than ever. True?
I think it's starting to. I think there's a long way to go.
What's the best investment advice you've ever received?
It's only your psychology, and complacency is the ultimate killer.
What are your views on some of David Sachs's views?
So I don't know David Sachs personally. I've had one or two interactions with him in the past, but nothing that you can point to as being a relationship. But, honestly, for the life of me, I can't work out what he believes America stands for, if it stands for even anything. You can't look after your own interests and not understand that the world is connected. And others, you need to find commonality of interests, and sometimes to promote others' interests, because the net effect down the line is supportive of your interests.
What's the biggest piece of BS advice that you hear given most often?
Contracted ARR.
Unpack that.
Folks tell you how they've signed a client, a customer, which has given them like 50 users, or or 50 deals, but that customer represents potentially 500,000 deals, or it represents 20,000 users or something like that. And so they write down the contracted ARR is the sum total of all those users. It's just another community adjusted EBITDA.
Tell me, what was the biggest mistake that you see first-time founders make?
Underestimating burn and overestimating their capabilities.
Biggest sin of the ZERP era?
Zero interest rates, venture debt, and capital raising with no thought about how money gets returned. Most people think capital is sunk cost, almost like a grant, but capital needs to be returned. It's a soft loan, it needs to be returned.
Where will you be in 10 years? What do you want for Entrée? What do you want for yourself, Avi?
I want to be on the beach with my wife, with my grown-up kids, Hannah, Arya, and Michal, and my 2 Shih Tzus, Ralph and Charlie.
I know you. That wouldn't be you. You'd be bored after a while. I know you would. You'd be like, where's the next deal?
I look forward
Harry, where's the deal?
I'm looking forward to being bored.
Dude, thank you so much for doing this. I've loved having you on, and you've been amazing.
Thank you. I really appreciate it.